Good morning, fellows. It's me Ali, and I warmly welcome all of you in another forecast video of the precious metal gold. Guys, yesterday, as you can see, there was a massive buying in the precious metal gold, and the market placed a high of something around 1976, while our resistance level was 1980. Anyways, market took a bullish trend, and then again, very sharply, market fell down to place a low of 1909 level. Well, guys, if you can recall our previous forecast, we discussed about the fact that today we have, like yesterday, we had the preliminary GDP figures coming out from the US economy. Then we had the unemployment claims figures. And most important of all, we had the Federal Reserve chairperson Jerome Powell speech, and we were expecting him to speak about the upcoming monetary policy. Well, that is something which has driven such a massive buying and such a massive selling in the market. Investors were confused about whether to go long or whether to go short in the market. Well, here's something. Due to COVID-19 and all this pandemic situation, the USA is still trying to recover from the economic loss, and the number of COVID-19 cases in the USA are still rising. They are not under control, although we have news of vaccination, but still things are not in control. According to Federal Reserve and especially the Jerome Powell, the economy is going to take some time to recover from the COVID-19 and the economic loss or the economic slowdown that USA economy is suffering. This is going to take time to recover from it. So and they are like happy to keep the inflation rate over 2% for extended period of time. It means that, let me explain how it works. If we want to keep the interest rate higher, we have to keep the interest rate lower, which means that if I am willing to keep the interest rate more than 2%, being a central bank representative, if I am willing to take or keep my inflation rate above 2%, it means that I'm happy to keep the interest rate near to zero level, and I'm also happy to pump the economy with the aggressive stimulus plans. So it means that when I put money supply in the market with the help of lower interest rate and with the help of quantitative easing, this is going to make dollar weaker, which means that the weaker dollar is going to make the precious metal gold cheaper for the foreign investors. And as soon as I made the dollar weaker, there was a massive surge in the prices of you can say like the precious metal gold. That is why we have seen such a bullish trend in the market. But again, you can also recall that we had drawn a downward trend line. This was there to accommodate or support, we can say that support the to provide the resistance to the precious metal gold, and it had actually provided resistance to 1977 level. Well, for now the market is again neutral. I can't say that whether there is a bullish bias or a bearish bias. There is a mixed bias in the market, so therefore we are also going to see a sideways movement in the market. There can be an upward movement, there can be a downward movement. So all we need to do is we have to follow the trading levels in order to have a safer side in the market. Okay, so speaking about, I will clean this up for you. So speaking about the precious metal gold, let's take a look at the 1 hourly time frame. Okay, on the 1 hourly time frame, as we can see here on the chart, the market has formed a bullish engulfing candle, which is again followed by a bullish engulfing candle, and there is a bullish crossover on the 50 pairs exponential moving average, which is suggesting a bullish bias among investors. But we can't deny the fact that we also have this resistance area here. So for now we can say that the immediate resistance that the precious metal gold is going to face is staying around 1944 level, while the support levels are staying around 1933, which is extended by 50 pairs exponential moving average. Guys, taking a look at the 1 hourly time frame, we can see that the MACD and the RSI both are suggesting a bullish bias in the market. As you can see, the histograms are forming above zero. Second of all, every next histogram is bigger than the previous histogram, which is suggesting that the bullish bias is still dominant in the market. So we can expect a continuation of an upward trend in the precious metal gold. So the immediate resistance is going to be 1944. Above this, the next resistance is going to be 1954. And honestly, I'm not expecting this to break above this particular level, but we never know. Like the market is totally uncertain these days. So we can, in case market breaks above 1954 level, the very next resistance that gold is likely to face is going to be somewhere around 1966 level on the way, because although 1977 is a nice level, but as you can see, with the passage of time, the trend line is descending, and the resistance level is becoming is getting lower and lower. So immediate resistance is going to be found around this particular resistance level, downward trend line level. So we can say that the immediate resistance on the higher side will be not the immediate, but after the violation of 1944, 1954, the next one is going to be 1966. On the lower side, the violation of, or you can say the bearish crossover on the 50 periods exponential moving average, the market can dip towards 1918 level, and on the lower side, the next support is going to be found around 1903 level. So guys, that's all for now. Keep following us for more trade ideas, and I hope to see you again with the next trade setup. Until then, take care of yourself and have a very profitable session ahead. That's all. Have a very nice weekend. See you guys next week with more forecast videos. Take care guys. Bye bye.